Well, hello again. This is Myron at PrimeLending, and I'm glad to be back with you for another video. I wanted today to talk about a concept that I think buyers and realtors alike will find extremely valuable, and that is being able to calculate a mortgage payment with no calculator. So if you're out on the weekend, or if you're away from your phone, or if you just want a general idea of what a mortgage is going to be without a phone or a calculator, it is very, very simple to do. So before we begin, what I'd like to discuss is the items that go into a mortgage payment. So there's 4 components to a mortgage payment that every borrower will pay when they put less than 20% down. The first is principal and interest, and simply what that is the principal is the amount of the loan that is being paid back to the bank on every payment that you make, and the interest is the money that is due to the bank for giving you the loan. So if you have a loan at a 6% interest rate, you are paying 6% each year back to the bank for giving you the loan. So that's the first, is principal and interest. The second is taxes. Taxes are paid to Maricopa County here in Arizona, and those are paid 2 times a year, both in March and in October, for the taxes on your home. 3 is insurance, and what that is insurance to protect against fire and theft if your home was ever to experience a total loss or a break and enter or something of that nature. And the 4th component is what is called mortgage insurance. Now, mortgage insurance is an insurance on a loan that is required when borrowers put less than 20% down. So those are the 4 components: principal and interest, taxes, insurance, and mortgage insurance. Now, here's how we calculate those with no mortgage calculator at all. For all of these examples, we are going to be using approximate but very close numbers. So they will not be exact, but they'll be close. So on the principal and interest, how you figure that out is I'm going to be basing these calculations on a loan amount of $100,000. So for every $100,000, these payments will work out. If you take out a loan for 30 years at $100,000 principal at a 6% interest rate, your principal and interest will be $600 per month for every $100,000 that you borrow. If you want to boil that down into smaller numbers, and let's just say, for example, you took out a $10,000 loan for 30 years at 6%, then you're going to pay $60 per month to the bank for the principal and interest. So on $100,000, it's $600. On $10,000, it's $60. And that works perfectly for a 6% rate. Now you might be asking, what if the rate is different than that? It is very easy to change those numbers for different rates. The concept here is not something you want to memorize for every 1/8% interest rate. That's just too many variables to keep in mind. However, it works very well for every 0.5% change in rate. So in the initial example, we have the 6% rate yielding a payment of $600 for every 100,000. If you go up 0.5%, all you do is add $30 per month to your principal and interest. So if the rate is 6.5%, rather than your principal and interest being $600 per month for principal and interest, it becomes $630 per month for every 100,000. Alternatively, if the rates go down, which we expect them to in late 2023, to 5.5%, you're going to subtract $30 from the $600. So your principal and interest becomes $570 for every 100,000 that you borrow. And the same holds true if it goes to 5%, 4.5%, 4%. So no matter what the rate, as long as you have a general idea of where rates are at, you instantly know what your principal and interest is going to be based on that specific formula. Now for the property taxes, those are broken down into 2 categories. If the home is between, call it 0 and 400,000, you'll want to estimate about $125 per month for the property taxes. And for home insurance, it's going to be approximately $75 per month. So you're going to be $200 for taxes and insurance on most homes in Arizona up to 400,000. For the next category of homes between 400,000 and 800,000, I would increase the taxes to approximately $300 a month and the insurance to $100 a month. So you're going to be a $400 principal or a tax and insurance number if the home's between 400,000 and 800,000. So there you have it. There's a very simple way to calculate the principal and interest along with the taxes and the insurance for any home or any loan amount that you might find while you're out looking. Now, the final component is the mortgage insurance. This does become a little bit more tricky because it is based on different credit scores and different down payments. So to build a rule of thumb that everybody can follow is just challenging to do. On an FHA loan, it is much simpler than it is on a conventional loan because mortgage insurance is the same for most instances. On an FHA loan, for every $100,000 that you borrow, your mortgage insurance is going to be $45 per month. On a conventional loan, I've broken this down to two ways. The first is, generally speaking, if you put down between 5 and 10% and have a credit score at 700 or above, then you're going to be approximately $35 per month for every 100,000. And if you're taking out a conventional loan with a credit score below 700, it's going to be approximately $50 per month for every 100,000. If you follow those principles, you're going to get very, very close to being able to estimate any mortgage payment, no matter where you are, no matter what the rate is. So as an example, in closing, let's look at a borrower who's going to take out a loan of $300,000 at a rate of 6.5%. Well, we know that at 6%, principal and interest is $600 for every 100,000. So at 6.5%, it would be $630 for every 100,000. So if you take 300,000 times 630, that means your principal and interest is going to be $1,890 on a $300,000 loan. Your taxes and insurance, as we discussed, are $200, and your mortgage insurance on that would be approximately $105. So instantly you know that your principal and interest is $1,890, taxes and insurance is $200, mortgage insurance is $105. That puts your payment right around $2,100. I hope you found these videos helpful. Again, this is Myron Chamberlain with the Chamberlain Group at PrimeLending. Thanks for watching.